All right, welcome everyone. I'd like to go ahead and get started. Welcome to the Eagle Infinity Open Interest lecture with me, your host, Sean, affectionately the Option Nerd. Looks like there's a few people in here. And, let's make this session a little bit more interactive. Type in the stream chat if you can hear me, first of all, and see my screens. And second of all, don't be bashful with your comments or questions. Most people, when they hear this talk track, they immediately grab it and bring it into their arsenal or things in your toolkit. So don't be bashful. Please participate and don't be bashful to, ask questions as well. Let me just double check to make sure that my audio is appropriately working. Looks like it is. Okay, so let's go ahead and get started. Welcome, everyone. So this is me. Who am I? Sean, and I affectionately call myself the Option Nerd. I've been doing and in the game actively, gosh, for over 20 years at this point, half my life, dating myself. But I've worn a lot of hats. I've been everything from a proprietary firm capital trader with 20-to-1 leverage when I was a kid to having my own proprietary trading floor. Ran 25 traders underneath me. It was a fun gig. Towards the end of that venture, I got kind of burned out. I walked over to Schwab because I got tired of trying to regulate and keep all these people in a box without breaking, securities laws. So even though I enjoyed it, I was looking for a little bit less stress. It's funny that you say that where you're looking for less stress in your 20s. So I walked over to Schwab. Instantly, they made me a senior broker. I had some more experience than some of the, senior team members that were on the fanciest team within Schwab. And I was the youngest kid on the team at the time, which is kind of fun as well. Towards the latter part of Schwab, I was on the institutional desk. Eventually, I became an advisor, and then I ended up running advisors for a company called SagePoint, 150 of them across 8 states. So other than that, I mean, since then, I've been more of a consultant. At this point in juncture, I trade stocks, I trade futures, and I trade options. And I'm likely to mash them all together depending on my mood. Okay, so this evening I wanted to, share some insights of things in regards to open interest that, I've come to. And it's surprising a lot of people don't know to look at open interest, but it can be a wonderful roadmap and give us some clues, mainly where price is going to respect, if you will, or where price will pivot. Okay, so let's get into this. Okay. And so what is our, kind of roadmap this evening? Well, I want to, first and foremost, kind of explain why we should care. Why do we want to care and look at open interest? And it's kind of like the unspoken. Open interest is pretty impactful, but a lot of there's not a lot written about it. There's not a lot of published about it, but we can actually use it as a roadmap. So we'll get into that and what that may look like. Okay. And why is it viable, or why do we need to care? Well, mainly we can actually identify key areas where the banks might be, which is a wonderful thing, because we oftentimes, it's a mystery where price will pivot. It's a mystery where Goldman is participating, or where, Warren Buffett's participating. Surprisingly, we can oftentimes look at open interest, and it's usually cards read. So there's a lot of data that we're going to get into in regards to the option chain. And, usually people find this impactful. And like I say, usually it's brought into your arsenal as far as, things to consider and things to look at along the way. When you're trading, when you're picking strikes, when you're looking at a ticker, when you're determining spread width, these are all fun things we're going to look at. Okay. And this bullet point up here about, confirming more powerful levels. And sometimes that's difficult because you can sometimes look at a stock, we could use Apple. What if there is a support level at, 145, but there's also a support level at 140? You're like, well, Sean, which one is it most likely to respect? And I'm going to look at you and say, well, I don't have a crystal ball. I don't have a Ouija board, but I'm going to go look at open interest. Okay. And that's going to be kind of a best foreshadowing that we have. And you just need to know what to look for. And so this is a skill Just once you know some of the isms that I'm about to share with you, then you'll be able to hunt and go search for yourself. Okay, so to me, this is more like a empowering type infinity stream this evening, to where I want to be able to provide you with a new skill. Okay, and I skipped this one over, but we talked about it lightly as well, where we can identify where the banks are not only placing trades, but oftentimes we can identify where they're actually doing spread trades. And to say it differently, sometimes I feel better about myself when I find a level, like a support or resistance level. I find a strike that I like, and then identify a spread width that I like. And sure enough, I see large amounts of open interest at the exact same strikes where I'm picking my own spread, which is kind of like ding, ding, ding. Not quite the stars align, but it definitely makes me, maybe another way to say it makes me feel more comfortable in my seat, or it makes me feel like my thought process is right in line with those that are pushing massive quantities around. And it says institutions there, but a lot of people aren't aware where an individual can be considered an institutional investor. And it's been years since I took my my securities licensure when I was a kid, but I think it's like, I want to say $10 million. There's an echelon to where if you are pushing that much weight or you have a certain net worth, you're no longer considered a retail trader. You're actually considered an institutional investor. And you can actually call the exchange and start routing your orders direct. I don't know if any of you have those problems, but that's actually considered what's called an institutional investor. And so you think that, it'd be, Bank of America or Goldman Sachs, but oftentimes it may be Soros, it might be Icon, it might be, the Buffinator. It could be an individual rather than a big bank or institution. They're just pushing a lot of weight and a lot of size. So the term institution, you need to know that's just, a big player. I guess that's a good word. It's a big participant. That's another good word. Okay. All right. So let's move on. Let's see what we got here. So this is, I guess, back to that first ism, like, why should we care? And if I were to back up just a second, um, banks and institutions oftentimes try to hide their intentions. In fact, Goldman Sachs got technically in trouble. So they had to testify in front of the Supreme Court. And basically, the Supreme Court said that, you're telling your clients one thing and then you're doing another. You're trading against your clients. And Goldman Sachs said, no, we aren't, no, we aren't, no, we aren't. And sure enough, the Supreme Court subpoenaed their emails and then showed them internal emails amongst employees that, yeah, let's get these clients, let's rip them off. And they were taking counter trades to the retail clients. And then the Supreme Court said, well, look, see, you guys are actually trading against your traders or trading against your clients. And then Goldman Sachs, all they did was dip their head and say, you are right, we have been doing this. But then they said, technically, it's not illegal. Okay. And so just, I'm giving some backstory, but just need to know that the banks and institutions usually try to hide their intentions. So like if we were to talk about like NASDAQ level 2 data, which is the ticker tape, which means a decremented code, which means the multiple participants at multiple levels that you can see, like on a stock, for instance, and it's usually references called NASDAQ level 2 data. They are trying to hide their intentions because they can actually put in what's called an iceberg order, where they can represent on the bid or the ask of a stock 100 shares. But behind that 100 shares could be, 30 million shares they're trying to unload at the time. Again, what's displayed to the retail public or to the universe is 100, but behind that 100 shares might be, 30 million shares. Okay, so that's actually called an iceberg order. Now, just know that those kind of monkey games by and large, don't happen in the option chain. Okay. So believe it or not, when you're looking at open interest, by and large, it's usually cards read. And normally they respect the levels that are represented in the option chain. Okay, so what I'm about to share is how to look for this, how to identify where the players are. And by and large, I like the word roadmap because once you find large participants or large contracts at a supply level, or at a resistance level or a support level, usually the stock will respect that within that expiration time period. Okay, and then we can use that information and actually use it, as an edge. And so again, we as options traders, oftentimes we like good volume on the underlying stock. I personally like, 2 million shares average daily volume is what I like. But then we don't look at volume on an option because options are thinner. No matter what stock that you're looking at, options don't trade as much as stock shares. So instead, we look at open interest. And one way you can think about open interest, if you need a definition of what that is, think the way I've always viewed it is a one-sided transaction. Or another way to think about it is an intention to buy or sell, an intention to buy or sell. And remember, the transaction technically isn't completed until expiration. So rather than trying to overthink what open interest is, just know that we can actually use it as an edge and we can use it as a roadmap to where a stock is going to respect within those, confines. Okay. And so with that said, um, to me, and then back up just one second. So let's say you're looking at like Apple, for instance, and let's say you see a resistance level at like 160, and then you see a support level at 140. So it's like a 20-point range, and on a 30-day expiration, for instance. Now, under normal circumstances, will Apple respect that area where the large open interest is on either side? The answer is yes. Okay, are there times where a stock will disregard large open interest? Yes. Unforeseen events. Like, I guess nobody believed, even though Russia had been threatening to attack for like 5 years, people were surprised they actually did it. But they've been threatening for 5 years. They just finally did it. But for some reason, it was a surprise to the market, right? And so your open interest levels might not hold, or the levels that is represented in the option chain, under, let's say, unforeseen circumstances. Could be Mother Nature, could be, humans doing horrible things with maybe nuclear bombs, could be a terrorist attack, all these things, interest rates rising, the most they've done since the 90s, did that impact the market? Yes. And so, under normal circumstances, by and large, a stock will stay in the range where we see open interest. Okay. And so let's go look at, some real life examples instead of me just giving you words. Back out of this, I'm going to jump over to my platform here, and let's take a look. I'll come back to Etsy in just a moment, but let's look at like Uber, for instance. And if you're taking notes, hopefully you are, I affectionately always have called this cherry in the Cheerios. And you can laugh at my expressions, but I think I like to give these corny expressions so it sticks in your head. You're eating a bowl of oatmeal or you're eating a bowl of Cheerios, and you look down and here's this, blackberry floating in your Cheerios, or here's this cherry floating in your Cheerios, and you're like, huh, how the heck did that get there? I didn't put it there. And so that's what you need to think when you're looking at like large open interest. And so another thing that you should write down, so it might help you to write down cherry and the Cheerios. You're looking for something that sticks out. Another thing that you need to remember is buy low, sell high. Because to understand how to look at the roadmap, you got to have some of this foundation. Buy low, sell high. So what do banks and or institutions or big players do? They don't want to buy at a high price. They want to step in and accumulate at a low price, and vice versa, get rid of it at a higher price. So if you understand that ism and apply that ism, now we start to look at the roadmap. Okay. So here we're looking at Uber Technologies. Here's a 23-day expiration. Okay. And just glancing down the open interest, where is something that like sticks out like a sore thumb, and the affectionate cherry in the Cheerios? 13,000 contracts. Now, I'm sure some of you are math wizards in this session with me, but what's 13,000 contracts times $23 a share times 100? Okay, so you can definitely tell that there's a ginormous player right there. And the funny part is, could that be Soros? Could that be Icon? Could that be, some of these individuals? Could it be, Goldman Sachs? You never know. And you say, well, Sean, how do you know that they're buying puts for insurance purposes, or are they selling puts? Well, chances are, if we look at the strike 20, there's 13,000 open interest. They're probably selling cash secured puts or covered puts. And in the meantime, they're collecting premiums, because even right now, this thing is having an up day. You can get 64 cents, which is close to, 3% on your money. So they're generating revenue while they're patiently waiting, generating revenue, lowering their cost basis while they're patiently waiting for the shares to be put to them at the 20 strike. Okay. And so would we assume that this is not part of a spread? No, this is probably some sort of single leg transaction, and it's probably not a debit put. We can go over to the chart and see, has Uber, based, it was dropping like a rock, but now we have the triple bottom or inverse head and shoulders and a base formation here, which is called an inverse head and shoulders. You can geek out and Google that, after our session if you'd like. But this is a reversal pattern. Okay, so now if we know that, just old school technical analysis, has Uber created a base? Now, I'm not saying everybody, go buy Uber right now, but is someone else looking right here and seeing this and they're like, shoot, I think it's based. And if it does dip back down to 20 bucks a share, are they willing to let shares be put on them? Okay, another way you need to look at this is a roadblock. Okay, and so another way you see this is that will Uber probably have a hard time getting below 20 bucks a share within the 23-day expiration? Is how you need to foresee this or look at this. And again, I told you that you can get intuitive. And again, a lot of times they try to hide what they're doing, but this is one area in Wall Street that by and large, it's usually cards read. Okay. What about, sometimes we can go out a little further and see if we have some residuals on a further expiration. So again, this thing's $22 a share, $23 a share. Is there another cherry on the Cheerios here? Yes, there is. Absolutely. Right here. So to me, yeah, I mean, to me, that's telling us that there's probably another roadblock, and you never know. Could this be actually the same person? Strangely. So they could be selling some puts on the 23-day expiration at the 20 strike. They could also be doing at the 51 as well. Okay, because they're willing to accumulate massive quantities of Uber. And by and large, Wall Street's been beaten up. And so is this kind of a buyer's market? Absolutely. To where they're finding ways to accumulate on the cheap. And selling cash secured puts is that one way to do it. Okay. So let's go look at another one of these. Let's go look at BABA. So here's BABA, and let's go back to the 23-day expiration here. And let's go see what we see. BABA is currently trading at 102. Okay. And so it's similar things. You want to scoot down the open interest, right? And affectionately find the cherry floating in your bowl of Cheerios. And again, you know, I've been using that expression for a long time, and I still get students, Sean, remind me what the cherry and the Cheerios is. Again, you want to see a large open interest that sticks out like a sore thumb, where we have, you know, this quantity here, and then all of a sudden we see this, we're like, ooh, look at that, right? And if we go over the chart, you know, that's the 100. And so, you know, like it or not, you may think that Bob is going to keep dropping. You know, mark my word, suspicion that this is giving us a clue, especially with these bottoming wicks, that maybe Bob may have a hard time getting below. Because another way to think about it, because if you think about it, you know, and take it a step further, what's going to happen if it finishes below 100 strike at expiration? Well, they're going to have basically 7,893 shares plausibly put to someone, because they probably sold puts here and they're willing to let shares be put on them. Okay. Now, could we also go up here and you say, Sean, are there some players here at 80? Yes, I can guarantee it. But this is probably more so, you know, this is a spread. We'll get to that in a little bit here, so I don't want to get ahead of myself. But this 7,000 is probably them not selling puts. This is probably just a put credit spread for somebody with a large bankroll, 7,000 contracts, because they're bringing in like 40 cents a premium. And they may be okay with that. They're just doing a way out of the money spread, because 40 cents or 40 bucks on 7,000 contracts, you know, you can do the math on how much of an income stream that is for somebody with a giant bankroll. Okay, and they're doing a further out of the money spread here. The fact that the quantities mirror each other, it's probably a spread. So I don't want to get ahead of myself. We'll come back to this in just a moment in regards to spreads. But this appears to be a cherry in the Cheerios, and you can write it down. You can write down 100 on Uber and then circle back the next couple weeks, and chances are it's probably going to hold this level. Not a guarantee. Nothing in life is guaranteed, but that's what the clues are representing right now. Okay. Now, before we leave BABA, could we also play the other side? You say, well, Sean, if this kind of could be a potential floor, right, for BABA, where's the ceiling? And, you know, we can come down here, check it out. And so same thing here, you know, it's affectionately like the cherry and the Cheerios. And so we see this 6,000 here, and then we see the 8,000 here. You know, you could say, Sean, is this kind of could be a call credit spread? It could be. You know, to where 6,000 of the 7,000 here might be a call credit spread for somebody. Okay, that's still bearish on BABA. Okay, but where's the real size? Where's the real cherry in the Cheerios? You know, it really starts to lay in thick at like 115. And so this kind of helps me over the years sometimes, where if I'm in something long, for instance, you say, okay, how much upside could I see in 23 days? Because this is a 23-day expiration. So we can also see where best case scenario price could get to. And in this case, mark my words, and I may be a Debbie Downer, especially if you're bullish on BABA, but like 115 is your upside, at least within 23 days. And sometimes you can not only tell where they're at, but you can tell how much time they think it takes to get there. For instance, if we were to go look at like the 51-day expiration, same thing. We want to kind of find the size, or affectionately the cherry and the Cheerios. And we can see the 110, 120. This may be a call credit spread, but the giant size is 125. And so what are we seeing here? Well, all they're saying is that they think it can get to 125 within a 51-day time period, is what we're seeing here. And could this be somebody selling a covered call in which they're willing to let shares be called away from them? And you're like, well, Sean, how do you know they're not buying calls? How do you know they're selling calls? Well, in general, if you see this kind of size here, they're probably selling calls because they're willing to let the shares be taken away from them at 125. Okay, especially if it is also respecting massive resistance up here. So strangely, we just cross-referenced the 125 resistance level. And so if you're long, you shouldn't be more greedy than to think that can punch through. Okay. And I didn't mention it before, but if any of you have ever subscribed to like newsletters, a lot of times newsletters, will give you certain levels. And you think they're a wizard sometimes, but to me, any decent level picker will not only find the pivots of support or resistance, but they'll cross-reference it with fat open interest. If that makes any sense. Or it becomes even better level if there's fat open interest. And so it probably isn't going to get to 125 within a 23-day expiration. The fact that people are selling calls up here at kind of 125 is saying that it could get up there, but it's probably going to take longer than a month or so. It might take a couple months to get up here. And when it does, is it going to get above? Probably not, because massive sell orders, because if you sell a call, you're selling your shares up here, which can cause it to come back down again. Okay. Hope this is making sense. I could pause for an uncomfortable moment. I got a bunch of you in here. Any quick questions before I keep cruising? I'm going to go look at Tesla next. Any questions? Any questions from the group? Comments or questions? All right, we'll keep going. So here we have Tesla, and you're to say, okay, option nerd, where Sean, where are we finding fat open interest? And so here, let's start with the 23-day expiration, and Tesla's trading at 824, right? So now we kind of cruise down, and let's start with the puts. And why am I looking on the put side? Well, we're trying to identify where somebody in the universe may be willing to let shares be put on them. And, affectionately, where's some sort of cherry in the Cheerios? The fact this is an island where we don't see a mirror quantity somewhere, this is an expensive stock. So when people do spreads on this thing, usually it's a pretty tight spread. So chances are this isn't somebody buying puts on Tesla. Chances are this is somebody selling puts. And again, it goes back to that original ism that I shared. You have to subscribe to buy low, sell high. Okay, and so if we come in here and the 800 is kind of right here, and did it pivot right here? And so whoever scooped up shares, because price was dropping, and it did a pretty hard pivot here, chances are the fact that it did that, probably means that that person is still here and they're selling puts into this area. Or another way to think about it, Tesla may hold this level kind of at the 800 area. Okay. It is a little bit premature. This was only, basically this week. But it did arbitrarily stop and pivot right here and go back up. Yes, it did. And so for the moment, it appears that somebody somewhere decided that they liked it. And if it dips below 800, they may be willing to let shares be put on them. Okay. What about the upside on good old Tesla? What about the upside? So if we come over here and you say, okay, buddy, where is the, the resistance or the affectionate cherry in the Cheerios? And we start to see it here. Okay. Right about 860, 870. So you may be a massive bull on Tesla. Well, if you were to, sit me down next to you, I'd say, well, you could be a massive bull up to like 860 or 870. So chances are in 23 days, it's probably not going to get much higher than where we see this fat open interest. And in fact, this is probably a call credit spread. But at least, like 2,500 contracts of this potentially could be someone, selling a call, where they're willing to let their Tesla shares be called away from them. Okay. And there's a little bit here, and who knows, could this 7,000 be part of this 3,000? So at least half this 7,000 would be a spread matching up with the 150s, because someone could be selling the 150s, buying the 160s, and doing a 10 wide call credit spread. Okay. But even then, if that's the case, there's still 3,000 contracts and then 9,000 contracts at 860, 870. So basically, Tesla's going to slow down, even if this thing just takes off like a rocket, kind of 860, 870 area. And this is another one we could come in here and see if we see more congestion on the upside, but then like 50 days out. Or another way to say it, okay, so if we look 50 days out, what's the plausible upside potential with Tesla? And this is kind of fun, because if you're not catching on, we're looking at open interest rather than looking at pivots on a chart. And so what I always like to share with people is, don't put all your weight and all your emphasis just on open interest. What I like to do is go check out open interest and then cross-reference it with pivots on the chart, your support and resistance levels. Okay. And so let's go look kind of to the upside potential, but then 50 days out. We see this massive area here. Look at that. What else we got? That's probably an in the money call. So this is probably an in the money call where someone is creatively trying to go long, but they didn't want to spend all the money to buy the shares, is what that is. But again, let's find the cherry in the Cheerios. And it appears that the cherry in the Cheerios 50 days out is like 900. So this is kind of fun, and you can play a game where you write down the ticker on a piece of paper. You write down Tesla, and you say, well, it's probably within 50 days, it's probably not going to go above 900. And so it's kind of like not quite fortune telling, but it'd be fun to write down. So write down Tesla, today's date, and then 900, and then you're like, oh my God! You look at this thing 45 days from now, you're like, oh my gosh, it ran up to 895 and then rolled back down again. It respected the 900. You're like, wow, Sean said that a month ago or 2 months ago. And it's not what I said, it's just this is what's being represented to us at the moment. Okay. All right. Any questions? Don't be bashful. Type in the chat. Let's see what we got on our slide here. And so hopefully this is making sense. And, basically what you're defining, I guess, in a simple premise, is range, within an allotted time period. Now, could you use this information for credit? Absolutely. Could you use this information for debit? Yeah. Because what if a stock drops down to a support level and you're like, huh, is now the time to buy my calls, or could this thing drop to the lower level 5 points underneath this pivot? And believe it or not, could you go look at the open interest, and this would be on the call side, believe it or not, to see if there's large open interest. And if there's large open interest on the call side at the level that it's at right now, and it corresponds with a support level, you're like, wow, this is another clue to make me feel a little bit better about going long and buying calls right now. Okay. So, to me, it's not credit versus debit, if that makes sense. Now, I will show you some skill in just a moment on how to use it for credit, but this is I guess a funny way to say it. This is bipartisan. It's not debit or credit. You can use it for either or, and essentially, it's identifying the range of the underlying potential, or where pivots are more likely to be. Okay. And so here we talked about this, where by and large the open interest in the option chain, it's usually cards read. They don't have to hide their intentions because they know the retail public has no clue to even look there, which is, to me, gives you an edge. And it's amazing. I've never seen it actually published or written in a book somewhere. To me, just, how did I come onto this? Well, this is me just day in the life. This is me just kicking the tires over the years, and you kind of notice some things, and then you can start cross-referencing it as well. All right, let's take a look here. So we talked about this, and I affectionately call it the name of the game is find the size, or better put, find the cherry in the Cheerios. Okay, and you want to look for the large open interest that sticks out like a sore thumb, and where the massive quantity is. And could that be one participant? Could that be several participants? Absolutely. And so let's take it a step further. Let's go look at maybe, I don't know, we can go look at like NVIDIA. So let's go look at a new ticker, and we want to identify some levels first. Then we want to go cross-reference it with open interest. Okay, we'll talk about this last bullet point in a moment here. And so let's go look at like NVIDIA, for instance. Here, and it doesn't really matter. Here's a 23-day expiration. But you look at something like NVIDIA, and you were to say, well, where are the pivots? So let's play a fun game here. So let's zoom in, slide this over, and this is a skill that, I think eliminates a lot of the guesswork, if you will. And I'm sure some of you have been there, done that, where you draw a level, and you're like, huh, is that where it's going to come down to stop on a dime and go back up? Or you come in here and you draw another level. We can get crafty. We can draw one here. Why don't we just keep it simple and draw a level here? And once you've drawn two levels like this, you're like, okay, which one would I pick? Now, if you do a credit trade, you could sell, a put credit spread here, even though it's not at the level, or sell a put credit spread down here if it's not at the level. If you do a debit trade, right, you'd have to wait till it's at the level first. I'm a big advocate of that. If you're doing a debit, you wait for a pullback, come back to the support, then go long. I'm a big advocate of that. So if you did a debit in this case, you'd have to wait till it gets here or here. Now, whether you're selling, doing a credit trade or a debit, it's like, well, Sean, which one's a better level for me? Okay, so we don't have to guess so much, and this is a I guess a trader assistant that hopefully can take some of the guesswork out of it. So now could we come in here, and we want to look on the put side to where we may find where they're willing to let shares, potentially be put on them. And where do we start to see some massive quantities? Obviously here, right? And sometimes people see, this here, but is this really where they're willing to let shares be put on them, or is this a put credit spread? And so when you see 6,000 here and 6,000 here, and especially where it's like, oh, that's a 5 wide spread, Sean, and and they're probably bringing in how much premium? It looks like $1.85 on a $180 stock. So that's like 1% yield. If it was a cash account, it's probably closer to 2% in a margin account. But this is somebody out there doing a 5 wide put credit spread. And is that more so where they want shares to be put on them? Probably not. They're probably just looking for some income, because maybe they think NVIDIA is done. And, that's kind of in this area. It is a little aggressive. So they're probably doing pretty close to the action, which means they're probably bullish on this. the 175, 170, which is kind of this area. Okay, but that's more so for like either weekly or monthly income for somebody. If that's making sense. You may want to mirror this similar trade because somebody somewhere likes it with a huge bankroll. Because 6,000 contracts, that's 6,000 times 170 times 100, and now granted it's half that because it's reduced maintenance, but still it's a lot of money involved right here. Okay, and so is this an institutional player? Yes, the amount of money involved. This is an institutional player doing a put credit spread on NVIDIA. Okay. Now, if we were to slide down a little bit and identify some sort of cherry in the Cheerios, well, my first pit stop is 160 right here. 16,000 contracts. So this is probably an individual selling single leg cash secured puts, and they're willing to let shares be put on them. Now, you may not want to sell a cash secured put, but you need to respect this because chances are NVIDIA is going to have a hard time getting lower than 160. And if we were to go back to the chart, where's 160? Sure enough, it's at this little booger right here. So if we were to draw both of these levels, which level is probably, and when I was younger, I had some people describe, you know, pivots to me. And one way it was relayed to me is like, could this be like a plywood flooring? Could this be more of a concrete flooring? So if you're to comparison contrast, or you decide which level to choose, whether you're doing a debit or a credit trade, well, it appears we start to see some concrete at the 160 area, if this is making any sense. Now, I get some of you see that 6,000 that we looked at, but again, that's probably a put credit spread. So it's not necessarily someone willing to let shares be put on them and go long. That's probably what this is. Okay. So for me, which one would I pick if you want to hold me down? Well, if you're to hold me down, this isn't advice. We just cross-referenced open interest. It appears this is probably more of a substantial level. Or another way, it's going to be a lot harder for NVIDIA to punch through the 160 area within a 23-day expiration time period. And so could you wait till it gets to 160, then buy your calls? Or could you sell puts down here because you want to own? Or you may be the individual to do a put credit spread, but you're going to pick the 160, 155. So then it's a little bit better barrier for you. Okay. So hopefully this is helping, group. And again, according to open interest, it appears that the 160s appear to be a better support level. Okay. Now, could we also quickly look at where the resistance is, or where the supply, where's the ceiling? Could. So here, excuse me, this is at 170 here. We can come in here. This is probably some sort of spread. The fact that it's 9,000 contracts. This kind of appears to be all alone at the 200. And so it's looked like upside potential is probably at the 200s. This 9,000 here is probably a call credit spread. So someone's creatively shorting NVIDIA just looking for income, but they probably had to sweat their trade quite a bit today. Yeah, that 9,000 contracts, they'd be sweating that trade quite a bit on a day like today, right? It was up 7%. So chances are, if they put this on before today, this 9,000 contract trade, they'd be sweating it a bit, right? Hopefully this is making sense. And up here, the 200s looks like is the upside, plausible potential. Now, I want to talk about a concept of, can we use fat open interest as a barrier? And then it's kind of taking a leap of faith where, could we actually use support and resistance as barriers for us? So it's not just, support and resistance, it's also confirming and cross-referencing with open interest. So we're actually using two puzzle pieces. And I don't know if, what technical analysis you've learned, but price rallied, it paused, and then rallied again. For whatever reason, there was a pause created here. Okay. And I don't know if I've shared this story, but one of my buddies was a pit trader. I had one in Chicago. I knew another buddy in New York that were on the exchange floors for many years. And they said that sometimes these pauses are created on the exchange floor, not that they decided to pivot right here, but these pauses are forced on them because there's no inventory to keep buying. And sometimes it can take 3 days where it pauses right here. Now, when this happens in the future, it can become a pivot in the future. And so some of you may have never seen or may have seen a support resistance level drawn like this, but we just cross-reference with open interest, and this is a rally, a pause, and then a rally. And so this level looks pretty good to me. Now, could we use this information as a roadblock? And when I became dominantly a credit trader, I remember like time and place where I realized where I can structure a trade where price likely won't go. So what if you were the person that wanted to make sure shares were put to you? Could you sell puts just in front of the large open interest here? Could you sell puts at like 165? Because you want to be a little bit more aggressive and you're willing to try to make sure the shares are put to you. Or could you be the individual to sell puts underneath the level or underneath where the fat open interest is? If we go back to the chart real quick, or sorry, the option chain real quick, we don't have to sell puts at the 160. Couldn't we sell puts or a put credit spread at the 157.50s just underneath it? And this is less likely to be in the money, but you're still getting a pretty juicy premium. Okay, even if it's a single legger or a spread. And so it was a kind of a paradigm shift for me to where I realized where I could actually use support and resistance and or fat open interest and structure trades just outside of that area to be a trader assistant, to assist me with a plausible help in my batting average, to not have the trade become in the money on you, if that makes you nervous. Okay. And so once you know what to look for in open interest, can you actually use it as an edge and then structure your strike either just inside of it or outside of it, because you don't want, shares to be put to you, or maybe you don't want shares to be called away. For instance, what if you own Nvidia and you see a resistance level here, but what if you want to still sell a call? And so what if we were to look a little further out? What if we were to look at like a 51-day expiration on something like Nvidia and see if there's any fat call open interest above 170? And this is kind of a little bit difficult, because you're looking for things that stick out. And do we really see it? Maybe here. Yeah, at 200. Okay, so there it is. And so, could you be the individual to sell call here, maybe at 205? Because you see this large open interest here at the 200 strike, but you want to keep your Nvidia shares because you think there's still more upside. So instead of selling it where others are selling it, could you sell it just beyond where you see the large open interest and just accept a little bit lower premium? But your objective is to make pretty decent premium, but still be beyond where it plausibly could become in the money, and then the shares are taken away from you at expiration. Okay. So again, we can use it to where it'll pivot. We can do it just beyond if we want to either stack the deck and getting shares or stack the deck and getting rid of your shares. Kind of fun. Or try to sideline of a credit becoming in the money. Okay. So let's come back here to my slide deck. So hopefully this makes a little bit more sense where, we can locate, support and resistance. We can locate levels, and then we can draw our levels and then cross-reference it with open interest. And what if the level that you drew also bears fat open interest, or the affectionate cherry and the Cheerios? It kind of makes you feel a little bit better. We could say an old school term, could it be an odds enhancer for you? Absolutely. And, to me, this is a trust but verify. So you need to go prove it to yourself. But by and large, stocks usually respect large open interest areas where they pivot. Okay. We talked about selecting inside or outside in regards to a strike, and we can also use it as a barrier, okay, where we can sell it just inside or beyond. So with that said, this is talking about support or resistance. This is also talking about open interest. Do you still need to remind yourself and, implement, bigger picture stuff as well? So in this regard, don't just pay attention to open interest. Also make sure you're still respecting, trends, for instance, because I think it was, I want to say, what did we look at? Was it BABA? I think it was BABA. If we go back and look at BABA real quick. So basically, I don't want you to just look at support and resistance at open interest and ignore everything else. I still want you to bring in, traditional things like trend, for instance. So if we look at BABA, I think this is the one that had the inverse head and shoulders. Maybe not. It was NVIDIA. I think it was NVIDIA. Nope, it wasn't NVIDIA. It was Uber. Where's the one that had the text spike? Here it is. It was Uber. Excuse me. So, I don't need to get too deep in a trend conversation, but is this a reversal pattern? Yes, it's called an inverse head and shoulders or a triple bottom bounce, right? And could you honestly say that this thing's in a downtrend still? Nope. I would disagree with that statement. Especially see this pivot here. If I zoom in a little bit, this pivot is a higher pivot, or what they call a higher swing low, than this pivot. So therefore, the fact that it pivoted here, it didn't come back down and test this low, this is actually a bullish signal. And we came up, we broke this high here, but then we sucked back in. And so to me, this is not a downtrending stock anymore. And so could you structure your lives to where you found excuses to be bullish on this thing? Sure. But again, you'd want to find the fat open interest. I think we did. It was up here at like 25 somewhere, I think. But yeah, you want to respect the trend. And I don't mind going long this thing. I didn't when it was back here somewhere, making new lows and punching through this pivot. But this is a sideways to slightly uptrend. And it did make a new high. It hasn't come back down and tested this low. So to me, are we in the beginnings, infancy, potentially on an uptrend? Yes. And is there plenty of recovery upside potential with something like Uber? Absolutely. So the trend is sideways to slightly up. So that would reinforce us that we could find excuses to be bullish. Okay. All right, let's come back here. A couple more things in regards to the spreads. And so, I like to, again, look at the levels and then also find the strike that I like and then the spread width that I'm comfortable with. And then we can also see where the institutions are. And so let's look at something like Etsy, for instance. Let's go see what we see on Etsy. And we can look at the chart real quick. So here is Etsy's chart. And it's similar where it was downward death spiral, sideways for a little bit, and another kind of triple bottom bounce. And, I don't care who you are, is Etsy in its infancy of an uptrend. Okay. And so with that said, we can go see what other people are doing, and in fact, maybe you don't want to own shares. You're like, Sean, I just want to put credit spread. I want income. Okay, fine. Could we go identify where others are participating? And so we can see here that these two quantities, in fact, mirror each other. The 90 is a 16,000 contract, as well as the 85s. So chances are this is somebody being bullish on Etsy and doing a put credit spread on Etsy and doing a 5 wide. And there's like $2 premium on a $90 stock or a $100 stock. So that's like 2%. If it was a cash account, it's probably 4% if it was in a margin account. And so a lot of people don't know to look for this. You're like, oh my goodness, is that what the players are doing? The big boys and girls? Absolutely. And you can think about the math involved where it's, 16,000 times 90 times 100 and then divided by 2 is the math involved. But is this a big player? Yes, it is. And they're doing a put credit spread probably for weekly or monthly income for themselves. So when you see this, you're like, could I just, ride on their backs and do the exact same trade? You could. You have to run your business and manage your risk. But this is what they're doing if you know what to look for. Okay, let's look at another one. Let's look at United Airlines. Let's go see what we see. Here's United Airlines. We can look at the chart real quick. This thing was trying to break and then it sucked back down. It is a higher pivot low than down here. All right, so let's go look at the option chain and see what we see. So currently this is 36.42. And, if we were to try to identify spreads, so that we actually have a twofer here. So this may not seem like a very wide spread, but it appears that this is probably a put credit spread. Someone's probably selling the 35s and buying the 34.50s. So it's a 50-cent spread, but they're bringing in 20 cents a premium on a $36 stock and swinging some weight at it, big quantities. So chances are this is a paycheck for somebody. This 3,900, the fact that it sticks out like this is probably somebody selling cash secured puts in which they're willing to let shares be put on them at 34. And then would that be kind of right at the support level? So did we just cross-reference this support level? Or another way to say it, are there others out there that think it's going to hold the 34 area? And the cool thing about credit is you may not care. You're like, Sean, can I just sell a put at 33 and use the 34 as the barrier that it has to smash through for my 33s to become in the money? Absolutely. I gave you the message. Now it's up to you to run your business. Okay. Again, it's not hard. You just need to know what to look for. And mark my words, is this probably a put credit spread that somebody put on with a big bankroll? Absolutely. Doesn't mean it's the right trade, but it looks like it's respecting the levels. So it's not a terrible trade. It may not be enough meat on the bone for yield for some of you, but if you're swinging enough quantity, they may not care so much that they're only bringing $20 premium per spread, but they're swinging a massive quantity at it. So then there's enough meat on the bone for them there. Okay. Did I have one more on my list? We can circle back to, actually we can look at one last one here. Let's look at US Steel for giggles. And I don't know if you were paying attention to commodities this week and last week, but we're finally, I think, done with the death spiral. And this is it's shaping up to be bullish market in commodities. Okay, so then with that said, could we go look and see what's represented, and what jumps out and jumps out? Well, this is probably a one wide spread, maybe. What else we got going on? This is a $21 stock. Here is a two wide spread. See, these two quantities almost identically match each other. Chances are, not for nothing, that's probably a put credit spread that somebody's putting on. And they're bringing in like 30 cents a premium on an up day, which is still pretty good, which is over 1% on a $20 stock. So this is a one wide put credit spread that the others are doing. And I affectionately say the others. 2,000 contracts, right? And they're bringing in 30 cents. So then it's enough meat on the bone for them there. This 11,000 kind of stands out by itself. So this could be a put seller at 18. And I wouldn't surprise me if there's some sort of level at 18. Sure enough, everyone can see this pivot here where price shot up. So is this still a support level here at 18? Yes, because there's massive quantity here where if it gets back down here, somebody will be willing to let shares be put to them and they'll be buying. Okay, so this is still a massive support level according to open interest with something like US Steel. Okay. So did I get to everything here? Anything else I wanted to share? Looks like we're going with it. Yeah, not only can you tell kind of where they're at, you can tell the width that they're establishing, strikes they're picking. Again, it's just find the size. Well, cool. Any other questions? Type in the Discord stream chat, excuse me, the Infinity stream chat if you have any questions. Any questions from the group? Comments or questions? You're in here. Love it. You're here. No questions? Looks like somebody's typing a question in. Someone's typing in the Diamond stream chat. Yeah, maybe people are typing in the, I should go look in the Diamond stream chat, I guess. I was looking in the Infinity stream chat. Let's look at the stream chat in Diamond, see if anybody's saying anything else here. Okay, cool. Cool, sweet. Well, cheers, everybody. Did I miss any questions? I didn't know that people were typing in the Diamond, so I just can look at the questions. Anybody, any quick questions? Looks like some of you enjoyed how I broke it down. Just reading the chat real quick. Okay, looks like we got to it. Okay. Well, cheers, everyone. Certainly a pleasure. And what about volume instead of open interest? How do they relate, Sean? That's a good question, Dusty. So, you know, to me, you know, as an options trader, volume is kind of light with options. You know what I mean? Could you cross-reference the underlying stock to volume spikes? You could. You know, what you could see is, you know, if it comes down to a demand level, you know, or a support level, and then it shoots off, and you see a nice volume spike, you know, where it normally, you know, trades 2 million shares a day, and then 10 million went off at that level. Chances are that could be cross-referenced in the future. That might be a future support level, but that's just like looking at volume spikes at a pivot. And I think that answers your question. The open interest is, you know, intentions to buy or sell or a one-sided transaction that doesn't complete till expiration, right? And so I see where you're going with that. But the answer to your question, you could look at volume spikes on the underlying at a pivot to kind of cement some of the concept if you'd like. I don't do that. I used to look at volume spikes, but me, I just look at open interest now. At a pivot is what I prefer. Somebody's visualize open interest levels on the chart. Ooh, I like it, Bibcoder. I would want to see pivots. So at each pivot, right, I'd want to see how much open interest is represented at a pivot. Ooh, most software packages can identify pivots, but it would be nice to see what open interest is represented at that pivot, and it would also say the expiration. Ooh, I don't think it exists, VibCoder, but build it, man. I'll be a subscriber if you build it. I love it. Let's see. Someone else is typing in a comment here. Someone saying, any comments to when open interest changes over time? Yes, open interest can change, but honestly, it's rare. And by and large, your stock respects the fat open interest levels or the range that it's established with open interest. When do they update, or when do they cancel their orders? When do they change their minds? When there's unforeseeable events. And I kind of shared that earlier, like, whatever it may be. Interest rates was the last, shock to the market. Before that, it was what? Putin. So if it's an unforeseen event, then they may pull their order, and then open interest may change. But by and large, if it's just normal, trading, they'll respect the open interest levels that are represented in the option chain within the expiration. Dusty's asking, when's the best time frame to check open interest? To me, it's just corresponding with debit and credit. 15 to 60 for credit, 90 to 200 for debit. But even if you're doing a debit trade and you're buying a 90 expiration, could you go look at like a 30-day to see, if you're buying a call, for instance, how much upside potential there is? And you're looking for a fat open interest on the call side on like a 30-day expiration, because in your head you're saying, I want to be in this trade for 15 days. In that 15-day period, how much upside capture is there? And you'd be looking for fat open interest above current price on the call side. If that makes any sense. Cool. Well, certainly a pleasure. Hopefully some of you got some things to take away from that. And again, this is kind of one of those that, the things I've uncovered over the years, and a lot of places they hide what they're doing. This is one of the places usually, you see their intentions, which is kind of fun. Cheers, everyone. Have a wonderful evening, and yeah, we'll catch you on the next stream. I think I'm doing a morning session on Friday, so if you're curious, I'm going to do a diamond stream Friday morning, first thing. So catch me then. All right, cheers, everyone, and have a good evening. Take care. Bye-bye now.